Thanks for that, Anuj. We'll come back when we do the 10 a.m. trades. For the moment, we are going to look at the restarting theme. It has been a few days since what the government calls Unlock 1.0 has been in effect. So let's take stock of how consumer-facing companies are returning to work and the kind of demand that is being seen on the ground. Sumit Malhotra, Managing Director, Bajaj Consumer Care, joins us now. Good morning, Mr. Malhotra. Thank you very much indeed for joining us. Well, it is tempting to start by asking you how your factories are. Are you in full capacity? But I want to first ask you about demand. Logically, your demand need not have fallen much at all. How was demand in April, May? And how is it shaping up in June?
Latha, before we start, let me also point out we haven't yet declared our results of last financial years, and therefore I'm constrained against giving you numbers.
Oh, sure.
But in broader terms,
yeah.
April was quite bad. In fact, surprisingly, hair oil was not classified as an essential, and therefore the initial bit, that is between the last part of May and early part of April, we were not allowed to open our factories or transport our goods, and we had some 100 trucks on the road which couldn't move because they were not considered essential to the nation. Yeah. But post that, it has picked up, and I'd like to point out that this demand is a very peculiar thing, because remember, people measure demand in what companies can sell, but that has actually two parts of it. One is basically pantry filling, which is basically because of that period that went by, you would have seen a lot of the channel partners going out of stock. So initially, April, there was a lot of pantry filling, but we all thought that this would subside towards the end of April, but May has been good also. So yes, if you call demand for our products, I don't think it has gone down as much as I anticipated, and all our scenario buildings and all that pointed to more gloom than it has actually yet played out.
Okay, that's actually great to hear, and your view echoes with a lot of the other industry participants that we've spoken to, that demand is not as bad as they feared. So that's a good thing. What is your capacity utilization right now? Are you working at full capacity, and any other supply side issues that you're facing currently?
No, actually, we are pressed for capacity at this point of time, and in terms of raw packaging material, we have got no constraints as of now. So it's actually the supply side, that is operations, production, is actually working as per normal. Our logistics is working as per normal, maybe taking a day or two more over a period of 5 to 7 days. So whatever took 5 to 7 days transporting material is taking a day or two more. Apart from that, there's really no negative impact as of now.
Oh, that's really good to hear. I mean, if you're near normal in terms of logistics and production, not too many companies have had this advantage.
But Latha, remember, one advantage we have is we have a single product, which is hair oils, and much easier to balance than a huge portfolio that other companies have. Second, you should also realize that we have actually launched in this lockdown period hand sanitizers, and we managed that decently well.
Okay. Actually, I was going to ask you that. You have Nomarks also. Is that jobbed out? And sanitizers, is that an in-house plant? Job works? How is it?
No, it's in-house plant. In fact, we've converted one of our hair oil plant into a sanitizer plant literally overnight. It took us all of 10, 12 days to convert it.
Okay.
And that has been launched under the Nomarks range, because if you have seen it in the market or on the net, you would have seen it's Bajaj, Nomarks, and sanitizer.
Got that, yeah. Mr. Malhotra, if you can give us some color about rural, urban, normally which markets you service more, and has the demand re-emergence been more or less similar in both places?
Yeah, that's a very interesting thing, and I keep telling people that I don't like this word new normal, because at this moment, there's nothing normal about the situation there. So people, when they use new normal, I sort of shrug my shoulders, because actually nobody knows new normal. But the situation on ground is that rural opened up much faster. The large cities are the places where you have the red zones, containment zones, and all of that. And therefore, urban distribution and also urban demand is getting hit much more than rural demand. And rural has just spurted. And if you compare it to the Jan-Feb period, where rural was under strain, in fact, urban was growing faster than rural. Though we don't have Nielsen figures, but our figures show that rural is growing much faster than urban areas. The reasons are multifold. One is obviously that the government has pumped in a lot of money in the rural areas to sustain livelihood and also keep that part of the voter bank happy. The second thing which we sometimes underestimate is the effect of the migrant workers going back, because remember, these guys were living in the urban areas and were actually tuned to the urban way of buying things, not the rural way. The rural guys normally prefer small unit packs. They prefer the LUPs, or low unit packs, whereas urban guys don't think that much about it. And all of these have landed up in the rural areas, and therefore even the buying behavior in the rural areas is changing because of this large, and that figure is anywhere between 1.5 crores to 3 crores moving back to the rural areas. So rural is one very important part of this recovery, if I can put it. I don't think that's correct. I wouldn't like to be counting my chickens. But whatever upswing we have seen at this moment is the rural areas. Also, coupled to that, the biggest problem is actually distribution, which means, in my opinion, reaching the goods to the rural areas. Fortunately, we as a company used to get around 40% from the rural areas in the Jan-Feb period, or pre-COVID. Another word I don't like, but we used to get that kind of rural demand, and we were able to up our distribution quite significantly post this shift in populace from urban to rural.
Okay. Well, that's very good to hear. And I guess on expected lines, right? I mean, now you have so many migrant workers going back home. So eventually the rural pie is only going to increase. Demand could pick up. But I want to understand from you if there are and were any working capital issues which has resulted in higher debt for you, because I assume that managing costs would have been tough during the lockdown period. What is the debt currently? Has it gone up? And any deleveraging plans that you have?
I think if you look at our P&L and balance sheet, you realize that this is a very cash-rich company, and we have zero debt, and we had enough money to last for a fairly long period. All our scenarios that we built in showed that we would not have a working capital constraint. We still don't take any debt. So that's one good place to be in, because like everybody used to say, the companies that were not leveraged would survive this period much better, and we have survived it without any major constraint in terms of working capital. That's a good part of it, what has happened, and that's why if you look at our P&L, you'll realize that we never went through this phase of having to go for more debt, or think about servicing that debt, or being happy that the moratorium had come into debt repayment and all that. We were sort of ring-fenced here.
But promoters is a different can, actually. Their stake has come down from 66.8 to 38% in the last 18 months. Yeah. Do you see them getting interested and buying it back since the share is lower? As well, any offers for Bajaj Hindustan that also will strengthen your balance sheet?
I don't get that Bajaj Hindustan thing because they are totally different companies. And one
You don't hold any
beauty of
stake.
this group
Okay.
is that we are all separate and we
All
don't
right.
interact with
Okay.
each other. So that's
Okay.
not there. And if you look at the promoter holding, on hindsight, and this is purely on hindsight, I think it was just the right time that he took the debt out of his portfolio,
Holding
because if this had been the situation that this kind of pledge had continued,
Yep.
the promoter family or the promoter group would have become under enormous strain.
Yep.
But God is great. I think coincidentally it happened at the right time. So he's quite happy, in fact, and things that are panning out have panned out in his favor. So I think that's a good thing that happened. In terms of our thing, we have zero debt. We don't have a problem with cash because we have a fairly high EBITDA and therefore a very good treasury also with us. So that's not a concern. I think in any FMCG, the consumer demand is the main thing, and we are still waiting and watching to see how it turns.
Yeah.
And that's why when I said I don't like the word new normal, I'm actually not sure that the new normal is here at all or not.
All right. Yes, sir. We will